Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey, welcome back to Big Money Real Estate. I'm Elise Blink. Here's today's daily update. I've got Daren Blomquist, Vice President at RealtyTrac, back with me again today. Yesterday we talked about RealtyTrac's foreclosure numbers for April, which was absolutely fascinating, and we are nearing the end of the really golden months for all of you who are looking for great REOs. But I wanted to continue our conversation about April's housing market activity by digging into the new construction numbers from the new report that came out this week. Daren, welcome back to Big Money Real Estate.
Thanks for having me again. Great to be on 2 days in a row.
I know, we love having you. So sales of new single-family houses in April of 2015, this April, were seasonally adjusted to be at 517,000. I think that this is the first time that we're seeing that seasonally adjusted annual rate over 500,000. I think it might even be the first time over 450,000 in maybe 7 or 8 years, and we're almost 7% above the revised March rate. The revised March rate went up to 484,000. We're 26% above where we were a year ago in April of 2014. And this is still about half of where I think we should be, which is sort of interesting. And I'm wondering, since the median sales price of new construction houses sold last month was almost $300,000 and the average price was $341,000, what do you think is going on here?
You know, I think we're finally seeing this increase that a lot of people have been expecting. Like, when are the home builders, and we see it in the housing start numbers, starting to build more homes, and we've seen that over the past year, and now they're finally starting to sell more homes. And so this is a really good sign for the most part that the home builders are confident that the housing market has returned to a more stable, predictable level. And then on the other side of the coin, buyers. The buyers are also more comfortable that they can buy in this market a new home at a higher price point than they would get an existing home for. And they're confident that that home is not going to hit a bubble and decrease in value. And so I think on both sides, the builders and the buyers are gaining confidence, and this really demonstrates that, and it's something we've been expecting for some time, to see this kind of pop in those numbers.
So here's my concern. If new houses are selling for roughly $300,000, it's about $297,000 and change. Excuse me. If it's selling for $300,000, you really have to be earning almost $100,000 a year, maybe 80, 85 if you really stretch it and you have enough of a down payment. You've got to be earning serious bucks. It's well above what the median income is in this country, which is still about $52,000 for a family of 4. So the number of people that it's not that a number of people don't earn $100,000. It's just that family income, that's on the high side. And so it seems like, since this is a median number, so the same number of homes sold for below that price is above that price, we're seeing the number of higher priced homes sell, whereas the number of lower priced to mid-priced homes, not so much.
Yeah, it's interesting. I think it's a valid concern to look at that affordability factor. But I think what you have here with the buyers is there's pent-up demand from buyers who have regained equity in their homes. We're starting to definitely see that when we look at home equity numbers. There's now 11 million homeowners nationwide who have over 50% equity. And
wow.
That's, I'm not misspeaking that, over 50% equity in their homes. And meanwhile, you do still have 7 million people who are stuck underwater, but those 11 million folks who are the target for these home builders, they've regained and gained a lot of equity in their homes, and they now, I think, are starting to leverage that equity into becoming new home buyers, and they can use some of that equity for the down payment on these higher priced homes. And then you also have the influence of foreign buyers, which is a little bit harder to measure, but they're coming in and willing to buy these homes at a higher price point. And that is, while affordability is definitely a concern from a perspective of income, you do have these buyers who aren't as dependent on income who are coming in and snatching up some of these properties, I believe.
I think it's going to be interesting to see what's happening. Like, I look at New York, and there are buildings that are selling where I think the cheapest unit in the building is $15 or $20 million. And some of those buildings have started to turn over, and while that's only 30 or 40 units, it does count in this total number. And there are a number of those kinds of trophy buildings that are going up in New York, San Francisco, Los Angeles, to a lesser extent in Chicago and Boston, down in Miami, where you are seeing a tremendous number of Latin Americans with huge amounts of cash coming in. And it's kind of interesting to just think about how that skews numbers just a little bit. And so maybe what we are seeing is a fair number of these houses go in at $250, which would be much more affordable to a family with income of $75,000, say, at today's interest rates, versus something that's a little bit higher than normal. When you look at the numbers that you have at Realty Track, I know that you feel good about this number, and certainly I think the more new houses that we can get built, the better it is, and certainly the supply of homes, which is less than 5 months at the current sales rate, it's not all that much. What else are you hearing about sort of new construction that would impact your customers?
Well, yeah, I think I think this is a good number, but I think that it's also very good that we're seeing evidence that this is kind of a number that everybody's been expecting for so long. Is, to me, evidence that the builders are being very cautious and very selective about where they're building and looking at data much more closely. And I think that's a good thing. I definitely think it's better for them to be erring on the side of caution. With this recent, we do believe there's still some shadow inventory caught up in the system that hasn't come out from the housing crisis, and there's evidence of that in our latest foreclosure report, which does show this surge in bank repossessions. And so the home builders are right to be cautious and know that in some areas there's still some of that shadow inventory that they will have to compete against. Maybe not so much with the foreign investor who has lots of cash, but with the more traditional buyer who's coming into the market and weighing the option of buying a new home versus an existing home.
Yeah.
We are seeing evidence there's more inventory on the existing side, especially when it comes to the distressed market. So caution, I think, is still the word of the day, and also an understanding that this foreign buyer is going to behave differently than your regular buyer in the past. And so you want to take that into account and think about how long of an owner, are they in this for the long term, for 10, 20, 30 years, or is this just an investment that they may turn around and want to sell in the near future?
I keep hearing that a lot of these foreign investors aren't even moving into these buildings, or if they are, they completely outfit them, and then they spend 1 week a year there, which is crazy to me.
Yeah, it's purely, in some cases, I think, an investment for them, a place to park their cash. And so as that, it's not necessarily going to be when something changes for them financially, they may want to sell that right away and very quickly. And I think that's created a little bit of a false sense of low inventory in this market when those buyers are snatching up so many properties, especially, and I think trophy properties is a great way to say it, in some of these markets like New York and Miami, and we see it out here in Los Angeles as well.
All right, well, great insight as always. Thank you so much. Daren Blomquist is Vice President at Realty Track. Thanks for watching this episode of Big Money Real Estate. Send me your real estate investing questions on Twitter and Facebook, and please share this video all around. Until next time, I'm Elise Glink.